And now, broadcasting from Titletown, USA, here's Joe Simon.
Hello and welcome to another rousing Joe Simon podcast where we love Main Street USA business leaders, owners, people. And when I mention Main Street USA, I'm talking about businesses that have 500 or less employees that they employ, that it's a closely held business, that it might even be a generational family owned business. Just studying some of the facts around that, congratulations to you who are a fifth generation or more business. I think you're in like the 30th percentile of the United States today that has a fifth generation business or longer. You know all the things that go around that. You know what you know about your business. You're really great at it. But there are certain things that you just don't have time for, or you don't like to make time for it. It's been pushed to the side of your desk for a long time, either digitally or physically. And so that's what we're going to be talking about today, things that you should hear again. And for you A-plus students that sit in the front of the class that have done all your homework and you're great on this, I give you one challenging question before we dig in deep here and quickly. And that is, if you've already done something along the lines of your succession plan and your business valuation and your golden handcuffs for your key people, I pose this question to you. How long has it been since you've done that? Have accounting rules and regulations changed since then? Might some of the life insurance guidelines changed along the way? How about your buy-sell agreement? Have buy-sell agreements changed along the way in the last several years? So use that mentality, that mindset as we step into today's conversation. I do have notes here that we need to look at because I tend to stray from time to time. This is one of my favorite topics, by the way, based on some of the things I opened up with today. So I kind of get excited and bring it all on at one time, and it gets a little confusing sometimes, a little too exciting, and we miss the point. So I'm going to be on task today. I'm going to keep this lean and mean for you. In other words, we'll talk about the skeletal features of the most important things that we consider when we talk about unlocking business value with permanent life insurance. You know, there's a big reason why we use life insurance in this planning process and knit it all together nicely where everybody's playing from the same piece of music, so to speak. But permanent life insurance offers more than just death benefit. When structured correctly, it builds cash value over time, becoming a flexible financial tool for supporting your business, for your families, for your key people in multiple ways. It also keeps your banks happy and your creditors very happy, knowing that there's a proper amount of life insurance in place in case something tragic happens to just a few of your key partners, owners, people that make things happen there. So let's quickly explore how permanent life insurance can help you protect your business value, plan for ownership transitions, and retain key employees, as well as fuel growth. We love the fuel that goes into the growth. So here's why your business needs this today, this hour. It values, your business values depend on many factors beyond your control. Ownership changes can dispute operations and relationships. Growth often requires capital that may not readily be available when you need it. And retaining key employees is critical, but can be costly if you're not prepared for it. We also look at other things that sometimes people implement into this or get confused, like traditional 401ks or a simple will. They don't address the challenges we're talking about here today. Permanent life insurance fills this gap. It offers the cash value needed along the way. We'll give you some specifics, reminders, or obvious ones, or an aha moment possibly in the next few minutes. but that value, that cash value accumulation, just gives you and your business time and choices when the business needs it, such as providing an emergency fund, such as a strategic reserve, such as a growth capital fund. I want to flash back for a second when we talk about strategic reserve. Show of hands, anybody lived through business-wise 2008? Anybody lived through business-wise 2020? Has anybody, show of hands, had to tap into what was known as a strategic financial or cash reserve? Never before in our lifetimes, possibly, have we had those consequences come to our front door and say it's this or that. And thankfully, there was a strategic reserve there. This is the kind of thing that this permanent life insurance can set you up for. In addition to the safety net, after all, it's insurance, insuring a life, making sure a lot of money is left and positioned in the right places in the event something sudden, accidental, and unplanned for happens. We want to make sure we can underline, we planned for a day like this, never thought it would happen, but it did, and the funds are in place to seamlessly and smoothly move on with our business. Lots of comfort, lots of good things come from that being in place. That strategic reserve is one of the things we hung on there. What about your business's succession plan? Let's talk about a hypothetical case, how things could go wrong, how things could go sideways very quickly. And here's our hypothetical case to think about as we go through this today. I'll call this the fractured partnership. Imagine you co-own a manufacturing firm with a 50-50 partner. If one partner suddenly leaves without a plan, the remaining owner might struggle to buy out the departing partner's share. Remember, that partner didn't die. The departing partner did not die. He's departing. We never use the word death here. This can lead to business disruption, family disputes, family disruption, forced sale or loss of control. We call that a fire sale. That's never good. Permanent life insurance can fund the buy-sell agreement, ensuring the remaining owner has the cash needed to purchase the departing owner's interest smoothly and seamlessly. This protects the business's continuity and preserves its value. It also makes your employees feel more comfortable, your lenders feel more comfortable, your vendors feel more comfortable, your deepest, biggest clients feel more comfortable with this. A big reason to do that. What about turning the page to protecting your key people with golden handcuffs, using permanent life insurance? So we put the life insurance in place to ensure a sudden death. That death benefit, the life insurance policy amount, is determined by the value that that person financially represents to your corporation times the amount of years it would take to replace them. So somebody represents $1 million in value to you because of what they do, and it's sort of or easily measured, and it would take roughly 2 years to replace them. So rough math tells us that would be a $2 million policy as to where we would start on justifying that to an underwriter at a life insurance company, backed up with some financials, to put that $2 million death benefit life insurance policy in place. So now that we have that established, then we start to back into how this could be a deferred compensation, a non-qualified deferred compensation plan, creating that excess cash value, creating an agreement between you and that key person. And I like to call it an if this, then that arrangement, where if that individual stays for a certain period of time, 10, 15, 20 years, each year they stay, there's a significant bonus going into this deferred compensation life insurance policy that will pay them upon the completion of those that time there, presuming there's not a death. If there was a death along the way, the death benefit typically goes hand in hand to the corporation for the reasons it was built. Sometimes corporations will also have an additional beneficiary in there. It could be the spouse or the direct family of this key person who would also be in line to receive a small portion of the death benefit built for really key person replacement value of that corporation. So those are just some of the areas: the borrowing, the use of the cash value, the collateral, avoid lengthy process of decision when money is needed for expansion. Some practical steps to implement a permanent life insurance policy for your business. Here's just a few of them here on my notes here. We want to make sure we have access for your business's financial needs. We need to review those. We need to make sure that we're not shooting into the sky hoping that what you have and needs to be protected is matched by that death benefit. We want to work with, and in your case, you want to work with an advanced markets insurance advisor, someone who has a team of people from the legal and the accounting side who all work together as a team and can anticipate the turns in the road when we do this sort of planning to make sure it's nailed down properly. We want to structure the policy properly. We want to make sure the policy is hand in hand with your buy-sell agreement. We want to make sure a legal document is inserted when we're talking about a non-qualified deferred compensation plan with a non-stockholder of your corporation. We want to make sure that it's integrated with your overall financial plan, your estate plan, your buy-sell agreements, any kind of tax strategies. We want to make sure that the team members involved with this are all talking and playing off of the same sheet of music, so to speak. And lastly, we want to review this regularly. Businesses change, policies change, people come and go. It's always just wise to make sure that we have a great blueprint that's a living, breathing representation of who you are and where your business is going. So that's it today. A quick message for all of you smart, hardworking Main Street USA business leaders. As always, there's a lot more to talk about, but we look forward to having a more personal case-by-case situation conversation with you. Have a prosperous day.
You've been listening to the Joe Simon Podcast. Big ideas with powerful stories and real-time solutions. Business succession planning, executive benefits, employee benefits, tax beneficial savings, and more. Remember, information discussed here today is dated and not specific to your situation. Always seek personal counsel from qualified advisors. Joe Simon is a licensed insurance agent in the state of Wisconsin. Licensed to advise on accident and health, life insurance, disability insurance and annuities, as well as qualified long-term care insurance.